On Thursday, the 7 biggest companies in the market lost almost $800 billion in a single day. And that wasn't on bad earnings. That was on one question. When does all this AI spend actually start making these companies money?
Spend more on capex than they generate in free cash flow by next year. Mizuho writing this morning that investors are starting to ask where the limit is.
That's the whole story of this week. Oil spiked on Iran, new tariffs kicked in, and the NASDAQ took a real hit. I'll break down exactly what happened, what most people are getting wrong about it, and why next week, Microsoft, Meta, Amazon, Apple, and the Fed are going to decide exactly what happens in the market over the next couple of weeks. Also, we'll be looking at which companies made the most money this week and which companies had a real sell-off. If I were to make a trade on any of those 5 names, it would probably be and I would definitely consider. But before we get into it, go ahead and hit that like and subscribe button if you're looking to find the next biggest stock and if you're looking to make money in any market, rather up or down.
I always want to know where the crowd is going, right? I don't want to be not where the crowd is, and that's how you find success.
Here's a quick scoreboard for the week. The S&P 500 slightly finished down, closing at around 7410. The Dow barely moved, about 0.4%. But the NASDAQ, that's where the damage was done, down 2.1% for the week. That tells you everything. This wasn't the whole market is falling apart. It was tech specifically getting hit.
Cap tech stocks are getting trounced today. Both Alphabet and Tesla on pace for their worst day in more than a year and are dragging down the major averages.
For 2 years, the market has been rewarding big tech for spending enormous amounts of money on AI spend. Data centers, chips, power, the stocks went up because they were spending. This week, that flipped. Alphabet and Tesla laid out just how big those capital expenditure plans are. Investors stopped clapping and started asking, okay, so where and when are these returns going to start coming in? And that's when the Magnificent Seven dropped almost $800 billion in one day. And here's the tell, and this is important because most people are getting it backwards. The damage was concentrated in the spenders. The names that got sold were the ones that are writing big AI checks: Alphabet, Meta, Tesla, Oracle. But a lot of the chip makers, the companies literally selling the shovels like Nvidia, AMD, and Micron, actually held up. And a bunch of them finished the week green.
Bloomberg Intelligence semiconductor analyst Jake Silverman. I mean, this is something Matt and I have been talking about nonstop, Jake. The fact that you can have this massive run up in this company and it still trades at under 10 times forward earnings.
That's a huge clue, and I'm going to come back to it. That wasn't the market saying AI is over. It was the market drawing a hard line between the companies spending on AI and the ones cashing in on it. First, and this is the one a lot of recaps are skipping, new tariffs kicked in this week. The Trump administration put fresh tariffs in the 10 to 12.5% range on around 60 trading partners, including the European Union.
President Trump just in the last few minutes announced new tariffs on dozens of countries. These are 10 to 12% or 12.5% tariffs.
Now, why does the market care? Tariffs are inflationary, and higher inflation makes it harder for the Fed to cut rates, which is exactly what a market full of expensive growth stocks is praying for. So new tariffs land right on the sore spot. Second, Iran. This is more serious than tensions.
The regime that any ship hit in the Strait of Hormuz will be met with a strike on an Iranian bridge or power plant, potentially inside the capital cities.
There have been American casualties, and Iran is targeting oil tankers. Oil is a big story right now. Roughly 1/5 of the world's oil passes through the Strait of Hormuz. So any real threat there is putting pressure on prices, and fast. For the market, all of that comes down to one variable: oil and the odds of a genuine supply shock. Brent crude ran up to $100 this week over this exact fear. But here's what saved Friday. Oil reversed hard, down almost 4% on the news of a US-Iran mediation talks with Pakistan. WTI crude back down around to $89. Now that's a big reason stocks stabilized into the weekend. That relief, it's fragile. So those are the things to look out for over the next few weeks in terms of geopolitics. But let's get into the 5 stocks that actually made money this week. So I want to look at which moves were real and which moves were just noise. The money didn't just vanish on the names that were down this week. It rotated, and it rotated pretty hard. Zoom out to the sector level and the story is crystal clear. Money left megacap tech and expensive software, and it piled into AI hardware, defense, and energy. Let's put some names on it. Dell, it was up almost 11%. Now they build the AI servers everybody needs. Analysts hiked price targets all week on a $51 billion AI backlog for the company. Now Micron, the memory company, up 8.5% on red hot AI memory pricing, and AMD, up over 5% this week after launching its new MI450 AI chips with OpenAI. Now the defense names. Raytheon was up 10%. They beat earnings and raised guidance 3 times. And a lot of this has to do with the Iran conflict. It's a direct tailwind for a missile maker. And energy, ExxonMobil, they were up 6.5% as oil spiked. Now here's a zoom out I want you doing on every single winner. Dell's up over 200% this year. AMD, it's more than tripled in 12 months. Micron, earnings are up triple digits year over year, and Raytheon has a record backlog. The business is growing, not just the stock. But Exxon, its actual earnings are down year over year. One's a trend you can ride, the other's a bounce that fades when oil does. Now the 5 losers. It's a who's who of big tech. Tesla, worst in the S&P 500, down 18%. And Oracle was down 9%.
Yeah, big drag. Falling knife over the last maybe 9-10 months here since hitting those all-time highs.
Palo Alto Networks, down almost 10%. And Alphabet and Meta, both down around 8% this week.
The stock is down more than 14%. Does this mean that investors just don't buy it?
I think patience is wearing thin.
Now Oracle, they got a credit downgrade on the debt that it's taking to build these AI data centers. Those are both fundamentals actually cracking. That's not a dip I'm rushing in to buy. Alphabet fell for the opposite reason. It dropped purely because it's spending on AI. While that same quarter, revenue grew 24% and its cloud business grew 82%. That's not a company in trouble. That's a great company that's temporarily out of favor because Wall Street got spooked by the AI spending. Now Meta and Palo Alto, they're kind of in between. They're both expensive, and it just seems that right now they're cooling off, but they're still growing. Now here's the whole game. When a stock is down, we need to zoom out and we need to understand, is the company actually getting worse, or is the stock just temporarily down? Is the company still growing, or is it starting to lose money? So you've got AI spending skepticism on one hand, inflation pressure, tariffs, plus oil on the other, and a market that's rotating out of the expensive stuff and getting a lot more selective. That's the environment right now. Not fear, but scrutiny. Now next week, it's going to be huge. I'm talking major tech earnings. Microsoft, Meta, Amazon, Apple, they all report. And if they show that spend is turning into real revenue and that the guidance is strong, this whole sell-off can flip into a bounce fast. And second, we are having a Fed meeting on Wednesday, and almost everybody is expecting rates to be held where they're at. So that's what to keep an eye on for next week. And out of the 5 companies that I mentioned, which had some real gains this week, I like Dell and AMD the best. If I were to make a trade on any of those 5 names, it would probably be Dell, and I would definitely consider AMD. As always, thanks for watching, guys, and remember to like and subscribe if you're looking to make money in any market, rather up or down, and if you're looking for the next biggest stock. Thank you so much.